As a dividend growth investor, I'm constantly looking for different higher yielding options, whether it's stocks or ETFs to add to my portfolio. Now, higher yielding options are of course great because they're able to allow an investor like myself to generate more income on a monthly or quarterly basis, which then allows me to have more income on an ongoing basis to either reinvest into more stocks or ETFs, or of course the investor always has the option to use the money for bills or life expenses. Now, the problem with most ETFs or stocks that have an initial higher starting yield is that they do come along with some risks. Things like price decay or even dividend cuts could definitely in theory make the higher initial yield not really even worth investing into at all. But in this video, we're going to go over a relatively newer ETF that I came across that does offer a huge starting dividend yield of around 17%, is pretty low beta, and doesn't really seem to have some of the risks that most other high yielding instruments have. Now stick around if you want to learn more about this ETF and all it has to offer. And before we get started, make sure to please drop a like and subscribe for more future content like this. So the ETF that I'm talking about in this video is the Simplified Volatility Premium ETF, or ticker symbol SVOL. Now heading over to the Simplify ETF's website, it says Simplified Volatility Premium ETF seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10, the inverse of the performance of the VIX index. They also say on their website, we believe many traditional sources of income are failing to meet investors' needs in today's low yield environment. SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent to other income-producing asset classes. The fund's short VIX positions provides investors an optimized exposure for monetizing the premium in the VIX future market. A modest option overlay budget is then deployed into VIX call options to help protect against adverse moves in the VIX. So simply put, what this ETF does is it uses options and shorts the volatility index, but then also buys a small amount of call options just in case their main trade heads for the worse. Now looking a little bit deeper into SVOL, it's currently sitting at around 400 million in total assets, which is honestly a pretty good size for a more alternative ETF like this. Now this ETF does have a pretty massive expense ratio at 0.66%, but with these sort of ETFs with this sort of management, it's sort of to be expected. Now looking a little bit deeper into SVOL and what's really caught my attention as of recently and why I've actually been starting to add some shares to my portfolio. And side note, I've even considered adding a few hundred shares more to my portfolio sometime soon here. But the Simplified Volatility ETF is currently trading around $23 per share. Year to date, the ETF is actually up 5.32%. On the max time frame though, just like pretty much every other more alternative, higher yielding ETF out there, for the most part at least, it's down. We've seen some price decay, down around 9.5% on the max time frame. Now this ETF has only been around since about May of 2021, so there's not all that much historical data to go off of, but as far as even the last year or so, this ETF has traded pretty much sideways and even a little bit up and to the right, which in my opinion is pretty much all an investor can ask for when investing into an ETF with this sort of strategy, because of course, investors are not buying into SVOL for massive ETF price appreciation. They're buying into SVOL because of the massive dividend yield. Now the trailing 12-month dividend yield for SVOL is 16.6%. Now the annual payout over the last 12 months is $3.83, or if you want to average it out, that's 32 cents per month over the last 12 months. And that's exactly what really caught my eye as of recently, where I did circle back and look a little bit deeper into SVOL. The fact that on the max time frame there is a little bit of share price decay, but as far as the year to date and year time frame, the ETF has been sideways and even up and to the right. So if you take that along with the massive dividend that it's paid at least over the last 12 months, SVOL definitely seems to be a decent option to add into my portfolio as sort of a satellite option, meaning that it's never going to be a major part of my portfolio, but it definitely, could be 1% of the portfolio or even a little bit more just to generate some more income on a monthly basis. And speaking of income generated so far, this ETF has paid around 26 cents per share per month, 35 cents per share per month, and then pretty much right along that range. But on maybe some more negative news, there has been the last few months of payouts that are a little bit lower at 30 cents per share per month. Now that's down from the 32-cent monthly payout that SVOL has seen over the past, I would say 6 or 7 months. But even with anywhere from say 27 to 30 cents being paid out on a monthly basis, and the fact that this ETF has a pretty stable share price, that would annualize out to around a 14 to maybe 16 or 17% yield, which I personally would be very happy with. Now, another thing that I actually really like about the Simplified Volatility Premium ETF is the fact that it has a very low beta of just 0.42%. Now, if you're not aware, beta is a measure of a stock's volatility in relation to the overall market. And it's honestly sort of ironic that SVOL does short the volatility index and itself has a very low beta. By definition, the market such as the S&P 500 index has a beta of 1, and individual stocks are ranked according to how much they deviate from the market. A stock that swings much more than the market is going to have a beta above 1, and a stock or ETF that trades within a smaller range is going to have a beta of less than 1. Now, of course, every investor has their own sort of threshold with what they're comfortable with, but for me personally, I like to have most of my stocks and ETFs in my portfolio at sort of a low beta. I currently have over 7 figures invested in the stock market in tons of different stocks and ETFs, and honestly, the less that the portfolio swings on a daily, monthly, or even yearly basis at this point, I'm definitely in favor of. Because honestly, at this point, I'm more concerned with just generating a nice return as far as price return, of course, but maybe even more importantly, as far as dividends. So the fact that the SVOL ETF does have a relatively low beta, the fact that year to date it's performed pretty well and seems to have no interest in slowing down, and the fact that every single monthly dividend since September of 2021 has been right around 30 cents per share, gives this ETF honestly a good chance of making up a bigger portion of my portfolio moving forward. Now, the last thing that I want to do is chart out SVOL next to the S&P 500 and use the metric total return, so this is dividends and ETF price included, total return, and see how much each of them have performed on multiple different time frames, and maybe even see if SVOL, in theory, could be a better investment than the S&P 500. So on the last month time frame, SVOL has returned 1.21%, and S&P has returned around -1%. Over the last 6 months, SVOL is up 16.84%. Again, this is with ETF price plus dividends included, where S&P is up 11.66%. Now, either way you want to look at it, these are both actually pretty good returns on the last 6 months, but year to date is even crazier because SVOL is up 18.04%, where the S&P 500 is up only 16.56%. Again, over the last 250 days, just about, both have returned a great amount of return, but SVOL is actually the winner. Now, the longest time frame we can look at as far as this chart goes, on the last year time frame, SVOL beats the S&P 500 once again, returning around 20.7% total return, and the S&P returning 9.17%. So as much as I would love to say that the S&P 500 beats SVOL, this newer ETF that shorts the VIX, it's just not the case. SVOL, at least on the time frames that we're going off of, has actually outperformed the S&P 500, which is actually crazy. Now, I know what you're probably saying, well, SVOL hasn't been around all that long, so over time, it's probably going to underperform the S&P 500, and that definitely can be the case. But just going off the data that we have so far, SVOL has performed pretty well as far as ETF price, dividends paid on multiple different time frames, and this ETF is definitely going to be added into my portfolio over the next few months here. But in the case of SVOL ETF, is this for you personally an ETF that you would consider adding into your portfolio to have some exposure to some higher yield? Comment yes or no down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.